All right, now let's look at some other issues now at this point. As the Genius Act is signed into law, that's July 18, 2025, it ushers in the first comprehensive U.S. federal stablecoin framework, creates fresh dialogue about how these rules intersect with Africa's dynamic fintech landscape. Key provisions mandate a one-to-one backing with the U.S. dollar or high-quality liquid assets, segregated reserves, monthly disclosures, audits for large issuers, and priority user protection at the insolvency event. Well, join us to unpack this now. We have Chris Morris, the CEO, Yellow Card, joining me via Zoom. Great to have you on the show, Chris. Yeah, so I see your mouth moving, but I can't hear you. I think you have to unmute, Chris. But while you're doing that, definitely it's all about the Genius Act, at this point. And, here we're trying to understand, what lessons, Africans can, learn, from the regulatory environment that can inform, U.S. and global stablecoin regulation, under frameworks, here, because it's huge, at this point. The Genius Act, what kind of act should Africa be looking at, at this point? But unmute before you respond.
Yeah, I mean, I think the big thing that Genius Act is doing is it's giving some regulatory clarity from the U.S. level to a technology that's already being used everywhere across the continent and everywhere across the world. So, with U.S. dollar stablecoins, you have, like you mentioned, right, one-to-one backing with the U.S. dollar. And this technology is being used to make the dollar more efficient and more effective all over the world, right? It's changing the way that people interact with the dollar, the way that the banking system uses the dollar in, countries across Africa and countries across the world. And now with this bill and with this legislation, I think that you're going to see a lot more adoption of this technology. And what that means is more efficient trade. What that means is more efficient international payments, more efficient access to dollars in countries that previously have had difficulties or issues with liquidity and access to the dollar. So I think you're going to see just a lot more efficiency in global trade as this technology continues to progress.
Right. All right, Chris. So I'm going to put you on the spot here a little bit. We've heard conversations and arguments about the U.S. dollar and the U.S. losing their status as the leaders there. We know the dollar is right there in most trades, international trades at this point, over 80%. Do you think with the U.S. pushing for stable coins and dominance in that market there with issuance, do you think this keeps the dollar ahead going forward?
Yeah, look, 100%, and I think that this is a big part of the reason why this was such an important act and such an important piece of legislation for the Trump administration. Is look, essentially all of history, right? All of recent history, you've had countries around the world using the U.S. dollar for international trade, but they're using it through SWIFT. They're using it through a correspondent banking system. Where, if I need to send money from, Nigeria to Kenya, that permission shouldn't have to come from New York to make that transaction just because I'm using the dollar. And so, you've had this correspondent banking system and this system of using the dollar for international transactions that was just never set up for countries outside of the U.S., right? It was never set up for the rest of the world. It really only benefits the U.S. And I think that, with stablecoins and with this technology, what you're starting to see is that opening up, right? Countries and banks around the world are able to interact with the dollar, to use the dollar in a way that they weren't before. And they're able to, move that money around the world frictionlessly without SWIFT, without correspondent banking. And, this act just adds a layer of, clarity and protection to that.
Right. And talking about SWIFT at this point, I guess if we get full adoption, for stable coins at this point, it's going to be hard to actually, take some countries out, from stable coins the way, the U.S. and, all the top countries can do it, with SWIFT. I guess that would be a thing of the past where we see full adoption, of stable coins. But do you see opportunities, for businesses, like yours to integrate, USDC in emerging markets now that it's, recognized under U.S. federal standards?
Yeah, look, I think that you're going to see. Look, when you look at Africa, right? You're talking about the continent that has the most adoption of this technology already, right? And the most usage of any continent, right? When you look at Nigeria specifically, right? It's the the #1 country in the world, and that's a Visa stat. That's not a Chris stat, right? For adoption of this technology, and so I think that what this legislation is going to do is it's going to make it much easier for banks and for large financial institutions to get involved, right? People are already involved. People are already using this. Businesses are already using this technology every day. So, it's not about how do we, get businesses to start using it. It's how do we get every business using it. And I think that, the banks and the financial institutions that people and businesses rely on, utilizing and adopting this technology is going to be a big piece of that. And look, I can tell you just within the last few weeks, especially since the original Senate vote on the Genius Act, we've been reached out to by a number of banks, right, across the continent, across multiple countries, right, very large banks, prominent banks that are now interested in how do we utilize this technology, right? How do we use this to move money outside of SWIFT, outside of the correspondence system? So I think you're going to see a lot of adoption from large financial institutions on the back of this. And you're also going to see, a much swifter promotion of regulation across the continent now that there's a framework available from the U.S.
Right, and as you mentioned there, African markets benefit from stable coins as payment bridges. We're seeing that with a lot of adoption, in Africa. But there's also the argument that the U.S. stable coin regulation may lead to, fragmented license tiers. How do you think this could affect interoperability?
Look, that's a great question. So the reality is, I don't think that we're going to live in a world where there's only going to be one stable coin, right? I think that where this bill specifically is heading, and where this technology is heading, is you're going to see banks across the U.S. and frankly banks across the world issuing their own stable coins. And you've already seen announcements along these lines from J.P. Morgan, from Citibank, from Bank of America, from other major U.S. banks. You've seen it from some big European banks. I can assure you that African and other continents will follow as well in terms of announcing stable coins and other initiatives like that. And so you're going to end up in this world where banks all over the world, large financial institutions all over the world have their stable coin and have their own sort of dollar, right, and tokenized deposits and all of that. And then you'll have various tools, right, both on and off chain. And look, I mean, this is part of what we do, but there are a number of tools that are going to pop up on chain, off chain, et cetera, that will ensure that interoperability is always there across different chains, across different stable coins, et cetera. So you'll live in this multi-stable coin world. But it will still feel like you're using the dollar, right? Everything will still aggregate into a USD balance at the end of the day.
Right. At this point where we're pegged, at this rate. But, looking at, the digital asset space, I remember there was a time where there were not more than maybe 100 or 200 digital assets, in the space. But right about now, it seems anyone can issue, a digital asset, at this point. And we've seen over 2 million altcoins or more, at this point. So, as banks and large platforms, issue their own, stable coins, how would your business maintain competitiveness in, Africa's remittance corridors?
Yeah, look, I mean, you're right. Everybody has their own token now, right? Everybody but you, brother. We're just waiting on you, man. We need you to
I need to launch mine.
Channels TV token. It's coming,
yes.
baby. That's it's going to 1 million. Look, I think as everybody keeps launching their own tokens and all of that, the big thing to remember is that there are a lot of meme coins. There's a lot of stuff out there that should largely be avoided. And there are a handful of stablecoins and major market cap cryptos, right? The Bitcoins and like that are still great for either savings, transactions, anything like that. I mean, in terms of how do we keep up with it, right? How do we maintain? It's about being able to support all of the major options. Right. The reality is that by supporting, a handful of chains and a handful of, stable coins, you're supporting over 99% of the volume, right? So, there are, again, there's 1,000 tokens being launched a day, but, most of them don't get any real play, right? If you support the major stable coins, the major chains, you're supporting, 99% of sort of global volume.
All right, so, looking ahead at this point, sometimes I try to look into the future with all of this talk about, artificial intelligence, stable coins. It just seems like everything might be decentralized, going forward. I want to know what you're seeing, going forward with this Genius Act.
Yeah, I think that this is going to really change the way that banks and countries around the world interact with the dollar. And like I said at the beginning, I think that this is going to make international trade, it's going to make invoice settlement, access to the dollar, all of that so much easier for international transactions, right? I don't think that this changes anything about the way that business is done locally on the ground in most countries, but it certainly changes the way that people think about and interact with the dollar for international transactions. Because now all of a sudden those transactions are becoming a lot less expensive. They're becoming a lot easier to facilitate. They're becoming instant, right? And they don't have to go through several layers of approval. So banks in emerging markets, right? Banks all over the world are able to control and hold their own dollars rather than having to ask for permission from New York, right? And so it's becoming a much more open and global ecosystem. And you're going to end up in this world again where accessing finance, accessing financial services, global trade, all of that is going to be easier than it ever has been.
We'll definitely be looking out for that future, but thank you so much for breaking it down for us. That was Chris Morris, who's the CEO of Yellow Card. Thank you for joining us today.
Thank you, sir.